Yeah, about half the over $1.6 million account, over half of it was turned over within that year. And so,
Yikes.
as long as those aren't all losses or the losses aren't offset by the gains, there's going to be some significant tax consequences for them at the end of the year.
If you have a taxable brokerage account and you have significant funds in that account, maybe seven figures or more, you're going to want to pay close attention because the tax consequences of how you are investing and managing your investments in those accounts can be fairly significant from year to year. So I just sat down with Nicole Norris, a financial advisor here at Asset Strategies, and asked her some questions about how to more effectively manage those funds. I'm Roy Furr with Asset Strategies. We serve over 2,000 clients in Nebraska and beyond. And check out this interview with Nicole. Okay, Nicole, so you were telling me about this client who has significant funds in a taxable brokerage account. And they were looking at some of what was happening before, and there was just a lot of tax consequences that was coming from activity in that taxable brokerage account. How does that end up happening? If somebody has a significant taxable brokerage account, how do they end up paying so much in taxes on that every year?
Well, there's a couple different ways that can happen. So, depending on how the account is invested, so if it is in a lot of mutual funds that have really high turnover year over year, those gains that are realized within those funds, any gains will be passed along to the owners of those funds. And so at the end of the year, in that taxable account, you have a tax consequence or you owe taxes on the gains that are realized. Additionally, if you own bonds or income type funds or income generating stocks that are posting a lot of dividends and realizing gains year over year for you, that will also create that tax burden for you at the end of the year. Or if someone's managing your account, in my client's particular case, most of what they owned were just stocks, which in and of themselves, outside of dividends, aren't going to typically generate too much income. But the person managing it was doing a lot of trading throughout the year. In fact, I think there were about half the over $1.6 million account, over half of it was turned over within that year. And so,
Yikes.
as long as those aren't all losses or the losses aren't offset by the gains, there's going to be some significant tax consequences for them at the end of the year.
So if it's a priority for somebody and they have, for example, a significant size brokerage account, they can, of course, sit down with the financial advisor, maybe look at what's been going on in that account, look at the tax consequences or investment implications of whatever's been happening and come up with a strategy that may be a better fit for their situation. And I know at Asset Strategies, we do offer a free welcome call for folks who'd like to come in and have that conversation and then schedule an appointment with an advisor to go deeper on that. Well, Nicole, thanks for answering these questions and providing this insight today.
Yeah, absolutely.
If you'd like to schedule a welcome call with a member of the Asset Strategies team, that is no cost, no obligation. All you have to do is look for the link with this video and go ahead, pick a time that works for you, enter some basic contact information, and we'll connect with you at that time, ask you a few questions, figure out how we might be able to help, and get you on the calendar with a member of our financial advisory team.